Hey everyone. So today we're diving into something that affects almost all of us, whether we realize it or not: herd mentality. We're going to break down how this powerful instinct to follow the crowd can seriously mess with your financial decisions.
All right, let me ask you something. Have you ever felt that pull? That itch to buy a stock or get into an investment just because it feels like everyone is talking about it? Like you're the only one not getting in on it?
If you're nodding along, yeah, you're definitely not alone. That feeling, that powerful urge not to be left out of the loop, it's not random. It's a real psychological thing, and it has a name.
So let's get right into it. What exactly is this pull of the crowd? Okay, so here's the textbook definition: herd mentality. It's our tendency to just copy what a bigger group is doing, a lot of the time without really stopping to think for ourselves. It's a super old instinct, right? Back in the day, safety was in numbers. You followed the herd, you found food, you avoided being dinner. But when you apply that same logic to the stock market, well, assuming the crowd is always right can be a really, really dangerous game. And that's because there are some very real consequences. This isn't just a harmless quirk. Following the herd can come with a pretty steep price tag, and it's all driven by a feeling we know all too well these days: FOMO, the fear of missing out. See, this whole thing isn't really driven by logic or careful analysis. Nope, it's fueled by pure, raw emotion. It's that crazy FOMO you feel when a stock is shooting for the moon, but it's also the absolute panic that makes everyone rush for the exits at the first sign of trouble. And this right here, this is the fundamental problem. When you let those emotions take the wheel, you end up doing the exact opposite of what you're supposed to do. You get caught up in the hype and buy when prices are already sky high, and then you panic with everyone else and sell when they've already crashed. It's a perfect recipe for losing money. Now, when this happens on a massive scale, you get a market bubble. It's a classic story. First, some hype builds around a new thing. Then the herd sees a few people getting rich and they pile in, driven by that insane FOMO. All that buying pushes prices way, way beyond what they're actually worth. And then, poof, something spooks the market, confidence evaporates, and the whole thing comes crashing down. And listen, this isn't just some abstract theory. We've seen it happen again and again. Think about the dot-com bubble in the late 90s, or the housing market meltdown that led to the 2008 financial crisis. Both were perfect textbook examples of where herd behavior can lead. Okay, so following the crowd is so dangerous. What's the alternative? Well, there are some investors who do the exact opposite. They make a point of swimming against the current. This approach is called contrarian investing. It's pretty much the art of zigging when everyone else zags. A contrarian looks at a market full of panic and sees a massive buying opportunity. They see widespread excitement and think, maybe it's time to sell. They're basically betting that the crowd has it wrong. I mean, the difference couldn't be more clear, right? The herd investor is driven by emotion. They buy high, sell low. The contrarian is driven by analysis, so they buy low and sell high. One blindly follows the crowd, and the other stops and actually questions it. But you might be wondering, what makes the herd move so fast these days? Well, a big part of it is something called an information cascade. Just picture this. You see two restaurants right next to each other. One's totally empty, the other is packed. Which one do you go to? Probably the busy one, right? You assume all those people know something you don't. That's a cascade. You're making a choice based on their actions, not your own info. And today, we have these massive amplifiers for information cascades. Social media, online forums, that constant buzz from 24/7 news, they can take one little idea or trend and blast it out to millions of people in an instant, creating a massive herd faster than ever before. So, knowing all this, what can you actually do about it? How do you avoid getting swept away? It all comes down to building a more independent mindset as an investor. Here's your game plan for protecting yourself. First, get to know your own emotional triggers. Are you feeling greedy? Are you scared? Acknowledge it. Second, do your own homework. Don't just trust a headline or a hot tip. Third, always question why something is popular. And maybe the most important thing of all, always remember that the crowd can be wrong. In fact, it often is. So, I'll leave you with this one big question to think about. When you look at your own decisions, not just in finance, but in life, take a second and really ask yourself, are you leading or are you just following the herd?